Everyone has been getting destroyed in the month of September, while I've been green every day except one. In today's video, I'm going to be showing you the only strategy you need to turn profitable if you're trading NASDAQ. That's NQ. And this strategy is going to work whether you're trading forex, whether you're trading options, whether you're trading futures. It's super simple and it's only going to need 3 confluences, so I'll break it down for you. The 3 confluences we're going to need is going to be an SMT, fair value gap, and a golden pocket. I'll quickly dive into each one so that we all have a basic understanding. An SMT is simply a divergence between 2 assets. In this case, we're going to be trading NQ and ES. So imagine this right here is NQ and this right here is ES. A divergence will be if on this higher high the NQ puts, ES makes a lower high, giving us a bearish divergence. The opposite would be true if it was in the low. So if you have lows like this will be a bullish divergence. Now, only thing you have to know, if at the lows, it can only be a bullish divergence, and at the highs, we can only have a bearish divergence. It does not matter whether it's in Q or ES making that. Next up, a fair value gap. A fair value gap is simply a 3 candle formation where the first and third candle leave a gap behind. So for example, here we see the first candle has the wick here, and the second candle has this big candle here, and the third candle, the bottom wick, does not overlap the first candle. So the gap in between the first and the third, this is what we call a fair value gap. And lastly, a golden pocket or a GP. This is going to be your Fibonacci tool, which is going to be right here, third down, Fibonacci retracement. You're going to change your settings, which you can click on here, then click on settings right here, and add the 0.66 and 0.618. This is a Fibonacci pull, which means when we have a move higher, we can fib out that pull, waiting for retracement into our golden pocket and take a position. These are going to be the only 3 confluences that we're going to need to learn the strategy. Every example that we're going to go over into this video is going to be trades that I actually took live with my mentorship group. If you're interested in checking it out, it'll be the first link down below. So now what we need to do to first look at the charts, we have to add a secondary chart. We can click up here on trading view, change the layout, and add yes. As you can see now, on the left I have NASDAQ, and on the right I have ES, or the S&P 500. We're going to need this because we're going to need to look for divergences between the 2 assets as part of our confluences. So this will be the 9:30 open right here, and we'll go into replay mode for this, and we'll go over the trade I took. So we have the 9:30 open. First thing I like to do at the 9:30 is mark out my previous levels where I can potentially see a divergence. This will mean the previous lows. I have a clear low right here, A55, so I will mark that both in Q and ES. As you can see, this same low right here, A55 on ES. Unfortunately, TradingView does not let us replay mode on both. Also, I let it play out the next candle. We can jump 1 candle forward and 1 candle forward. So right there. Next, before we take out this low, I would also mark my 9:30 opening. Understanding that the 9:30 opening usually tends to be really important for the markets to see which direction we're going. On our way down, we just created a bearish fair value gap, which I would also mark. Keep in mind, I'm using the 5-minute time frame, which means each candle is simply 5 minutes. Then now all I'm waiting is for one of these lows to be taken out. This will be our first low, and if that were not to hold, I will mark down the low all the way down here, which will be where I'll be looking for potential reversal next. Now in this next candle right here, which is the 9:30 opening candle, we notice that ES has a big candles through this low, while we notice that NQ does not. We can play one more candle to show the confirmation that that was the case. We'll jump 1 candle. So as you can see right here, this is the next candle. Did not take out the low, while ES did. Now I will mark out this as a bullish divergence, looking for price to potentially reverse to the upside. So now from the 5-minute, I will move down to the 1 minute to look for my next confluences. What I'm looking for is a fair value gap and or a golden pocket retracement. Usually I'm going to be looking for both. So what I want to understand here, we have a 5-minute bearish fair value gap, which we created early. So I can write down bearish 5-minute fair value gap. Looking for 2 things. I'm looking for this bearish 5-minute fair value gap to get disrespected, which means price to close past it, while at the same time creating a bullish 1-minute gap to confirm our potential reversal. So as we play the next candles, we see right here, we just created a 1 minute bearish bullish gap. We also see that we have, we close above this 5 minute bearish gap. So we're getting one confirmation as bearish price action after SMT was formed is getting disrespected. Now I will mark out my 1 minute bullish gap right here, and I can delete this one. And next, what I would do is fib out the bottom of the SMT. This SMT now becomes our protected low. Why is it a protected low? Because it's the level where we got the divergence from. So you can mark out this low and write down protected low. So as long as price stays bullish, this low should not be taken out before our next target. So we write down there protected low, and we know that if this low is not meant to be taken out, where we should have a retracement into our golden pocket and into our fair value gap. So we can play out the next candles to see what happens next. Right here, we finally get our first test of this level. We're looking for a nice reaction out of this. I personally waited a couple extra candles, and we're confirming this. As you can see, we're retesting it. We're confirming this with the 1 minute not closing below the golden pocket and the 1 minute not closing below this fair value gap. So any entry in the 0.5 of this fair value gap will work. Keeping a stop loss wide enough or a soft stop loss personally is what I do to not get stopped out if there's any wicks. When I first entered the trade, I used this, my protected low, as my stop loss. I fixed this up, and I targeted the previous all-time high from the day prior. So this was the all-time high for NASDAQ, and this was our target for this trade. So this trade overall is giving me a 1 to 3 risk to reward. So we would let this trade play out for the next candles. You can see now we get a nice reaction, and then we push. As this price is pushing, what I'm doing is looking for the next levels that price should respect. So as you can see here, we created 1 minute bullish gap. So I understand if price is going to stay bullish, we respect it as 1 minute bullish gap. We create a protected low, which means if we come down to retrace here, this 1 minute bullish gap should stay respected. So my stop loss from all the way down here gets trailed up all the way here. And this is how I'm managing my trades as I'm trading, waiting for my full take profit to be hit. So you can see in the next couple candles, we come down, retest that 1 minute bullish gap, it gets respected, and then we hit all-time highs. Now, when we hit these all-time highs, I'm also still keeping an eye on ES. I'm keeping an eye, making sure what is ES doing. At the same time as NQ broke the all-time highs, the all-time highs of ES all the way up here does not get tested. Look how much lower it was. It didn't get that pushed, and Q did. This is telling me that my take profit was correct. This is telling me that next up, probably ES and NQ want to go lower. We got the bullish SMT down here, and now we got the bearish SMT at the highs. Tell me if I have any trailing trades, I can stop out, I can close them, and I can end this trade green. This simple strategy is exactly how I'm trading every day and how I'm using top-down analysis from the higher time frames to the lower time frame to find the exact entries. I'm using market conditions. I'm understanding where the market is telling me we want to reverse. I'm understanding when the confirmations are there, and I'm getting in at the good prices. Why? Because I'm using my Fibonacci to do so. I'm understanding where price should respect order flow, overall direction of the move. And if you implement this strategy into your trading, I promise you, you're going to start getting results overnight. Just like my student Robert, I got over $15,000 payouts in only 3 weeks using simple strategies like this. If you're watching this video, if you want to learn more strategy, make sure you subscribe down below. And of course, check out my mentorship link, which will be in the description.